technical analysis of the euro dollar. Hi, it's Charlie giving you Wednesday's video. I'm recording this Wednesday lunchtime almost, and we're going to have a look just at the euro dollar. We're coming up towards the Christmas break, so obviously I won't be doing a video on Saturday because that is Christmas Day. But I'll set up a couple of videos whilst we're away over the break or whatever. We'll still get videos out to you, or I will still get videos. I'm sure Kim will be as well. So what we're going to do is have a look at this the euro dollar here across a few different time frames. So you can see I've got a few lines on here anyway. I've got some moving averages and I've got some trend lines and whatnot. So first of all, let's have a look at the price action. So the euro has, and bear in mind, the euro dollar is by far the biggest single currency pair, and so that it accounts for something like 60% of the total dollar index itself. So the euro is by far the largest single currency pair against the dollar, which is put into that dollar index basket, which is why very often if you look at a chart of the euro dollar and then you go and look at a chart of the dollar index, they're pretty much inverted. They're almost identical, not 100%, but they are almost identical. If I can bring this up, now the dollar index doesn't want to show, so my e-signal's deciding to delay here, but you'll have to trust me on that. It's it's inverted. Let me press pause. Right, there we go. So we can see that is very, very similar in reverse of what the euro dollar is doing. So that's what it essentially is. So what we're doing is when we're analyzing the euro dollar, we are essentially analyzing the dollar itself, okay, the dollar index. So as we can see, we've got this nice trend channel here, which has been in play for quite some time. We can see that price got down, came on the outside of this trend channel here, and has then managed to get back up within the channel currently, and is now chopping sideways. So firstly, looking at the daily chart, it's a consolidation after a down move, which would normally be seen to be after a down move, a continuation after the consolidation would mean that it would come lower if this is a continuation move. So all it needs to do now is to break the lows of this consolidation. And so if that is the case, but of course a consolidation can also be accumulation, and we could see a bounce, considering this euro dollar has been coming down since end of May. So it's been a decent move down, and it's had bounces along the way, but maybe we're due another one. So we'll see if that's going to be the case as well, in which case a break of the height of the consolidation should see us move higher. I'll talk about where to in a minute, but certainly we've got this trend channel here as a potential run for if the euro does go higher, then look to that upper trend channel there. We'll look at a couple of other factors there as well. What's this horizontal line here, and what's these other diagonal lines here? So let's go out to the weekly charts. So you can now see that horizontal line links up to the spike high from the COVID high, spike high in early March of 2020. And so I don't think I've got it lined up against anything else, particularly just a few highs there. But that was such a nice singular peak there that warranted having a horizontal line there. So we broke below that a while ago now, several weeks ago. And again, on the weekly chart now, we can see that we are consolidating here on the weekly chart as well. So some indecision candles, yes, but overall a consolidation period. So, and overall, like we've already seen on the daily charts, it's a downwards trend at the moment. Even on the weekly charts here, we've got my 50-week moving average is pointing down now, although price is a distance away from it. So it is a bit of a distance away from that. So that is something which prices like to mean revert, and so it's possible that it reverts back to that 50 at some point. I've also just put my blue moving average on here, which is my 20. And again, since price broke down here in June, price hasn't been back to revisit even that 20 as yet. So the scope is there for retracements, certainly to that trend channel, and also my 20 period moving average. Doesn't matter if you use a 21 period. I use simple moving averages as well. That's an entire different story. But yeah, there's simple moving averages I use on my chart. But overall, whatever retracements we do get, they should be seen as retracements until proven otherwise. So any retracements we do get overall should just be retracements, and then the market, you would normally expect at some point the market to then roll back over off of those retracements, off of those resistance zones that price pulls back into. So what's this this diagonal line here? So now we need to go out to the monthly time frame. And we can now see that this is this long-term diagonal trend line moving across from the highs of '08, coming all the way down. Now, we broke that last year, and so we had that breakout, and we've broken it. And as you can see, we're coming back down to retest it, and we've got really close to testing it here, and it would qualify. I would say that, yeah, it's done enough to qualify as a retest. It hadn't quite hit it, but then again, depends on where you draw your trend line. Levels are never an exact science. So if I moved it up slightly to that absolute peak there, then that would probably mean that it hit. So, but anyway, so we've done essentially a retest of that at the moment. But now we've got a longer term trend line coming into play down here as well. So certainly we've come down to enough. And if we were to bounce, just looking at the monthly candle here, and if you look at the average true range here, that we're more than halfway through the month. Yes, I know we're coming up to Christmas, but people think that, we go to Christmas and the markets don't move. And that's not true. Just go back through your charts over several years and you'll see that the markets do merrily move around over the period. There's usually a couple of very sluggish small range days, usually Christmas Eve and maybe the 26th. But the market will be moving around, and certainly there's scope there. So the range so far for this month is about 160 pips. The average true range is practically twice that much. So I'm not saying that it has to do twice that much, but certainly the scope is there for it to expand this range. So let's assume we've done 160 pips so far. Let's assume it doesn't do twice that much, doesn't do another 160 pips, but let's say it does another 100 pips. So if we come back to the daily time frame, then the scope is there that if we do break the highs of this range, that there's 100 pips at least in it, which would take the euro into the upper 114s, which again sits well with if we see a retracement into this channel. Back to this channel line. So if we are going to come up, then you can sort of see the recipe is there, and really it's only got to have 2 or 3 half decent days of price action, and it would be up there. So it wouldn't take a lot to get up there. Likewise, though, if it broke down to the downside, then add another 100 pips below that, and we could be down into the low 111s. Okay. So if we come now out to the quarterly chart. Okay, so this is now the quarterly chart, and we've got a slightly different feed here. So we've got the composite on, and you can see this long-term trend line going all the way back. Now, the euro didn't exist, but obviously back in 1985. It didn't exist in 1995, but it's a composite of what was a collective of those, the French franc and the German mark, and prior to the euro's inauguration, which was about 99. So we've got this long-term trend line here anyway, and we can see that price has been bouncing along this lower trend line for the last sort of 6 years, 6 to 7, nearly 7 years now since it came down. And we can see it's trying to break, but every time it tries to break, it comes back up. Then it came down last year, and then it came back up again, and here it is again. So the potential is there in the much bigger picture here on the quarterly chart, is that it might still want to do a larger break of this trend line. And if it's going to do that, then I've got this trend line down here, technically. We've got this triangle pattern or wedge pattern, whatever you want to call it. And so the potential is in the longer term for the euro to come down to that level. Okay, so if it does bounce in the near term over the coming weeks and bounces back on that daily chart back up to the channel and the weekly 20 and it could take several weeks to play out, I'd still be looking at the moment that at some point, maybe in the next 6 months, that it would still want to wind its way back down towards the lower trend line here of this wedge. So there you go. There's an entire breakdown of the euro chart from the daily time frame going all the way up to the quarterly as it stands. So as it stands, if we look at the intermediate time frames, then we can certainly say on the daily charts, weekly charts, the trend, and put this back to the singular feed, the trend looks certainly down, and any bounces that we do, any retracements we get, we should treat them as retracements until proven otherwise. So any moves up, yes, there's definitely the potential for 100, 200 pip retracements. So certainly tradable if you're interested in that. But in the longer term analysis, looking at all of the support and resistance lines, it looks like its trajectory at some point will then be back to the downside. So that's how I'm looking at that. But it depends on what time frames you trade. But very often, when you put a load of trend lines and whatnot on your charts, you will see so often price will play itself out one way or another to those next levels on your charts. So I'm still suspecting that one way or another, even if we bounce for a few months, that we might still end up working our way down to that wedge pattern that I just showed you on the different time frame there. So, but as always, when it comes to the markets, you can have analysis, but you then have to find a way to trade that analysis. So it's all very well having a said piece of analysis. How do you trade it? Where do you enter? Based on long side or the short side, where your stops are. You could be right in your analysis, but still end up obviously getting stopped. So that's something you have to plan for anyway. And one last thing here, if this is my final video before the end of the year, just a nice little line here. It's okay to lose to the market, but don't lose to yourself. So that's just a little thought there as we're going into the end of the year, because losing in the market is a natural thing. You're going to have losses and losses and losing trades, but don't allow your mindset to take control. Take care for now. If I don't see you, have a wonderful Christmas, and I'll have videos coming out to you between Christmas and New Year anyway, and enjoy the festive period.